I've said this in a couple of interviews in the last couple of weeks. Liquidate that position, demand physical, particularly on silver, because that's how we're going to drain physical silver out of the global market and put pressure on the Comex.
Wednesday, March 24th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to be talking with John Adams of Adams Economics in Sydney, Australia, about how the only way to defeat the central banks and the bullion banks is to continue to stack physical silver and gold. Before I do that, we're going to quickly look at the markets and see where they are this morning. It's 7:36 a.m. London time. I like to say the stock markets are looking very interesting. They're looking like they want to keel over. I saw the NASDAQ topped a few weeks ago, the Russell 2000 as well, and it looks like the S&P and the Dow are following suit. So let's get to our usual rundown. We've got spot gold up just about $1 at 1727.80. The high's been 1734, the low 1723, so still consolidating, despite the fact that you're going to see that the 10-year yield is continuing to drop. We've got silver at 25.06, up 2 cents. The high's been 25.25 and the low 24.96. The Dow future is up 13 points. The NASDAQ future is up 25. S&P is unchanged. The currencies are looking interesting here. The dollar is strengthening versus the fiat currencies. As I've said before, it's just a paper game here. As John X just said, the I owe you nothing currencies, they keep moving from I owe you nothings to I owe you nothings, trying to hold a semblance of value, but in the end they all go to zero and they owe you nothing. And when you hold their currencies, there's nothing behind it. Despite that, I've noticed the pound has dropped through key support around 137. Just look at this chart here. I think we're on our way down in the pound. We've gone up anyway in about a year from around 114 to above 140. I think this is a change in the trend that we've seen in the last year. Right now, we're at 136.85, down 0.5% cable. The euro is at 118.28, down 0.2%. The dollar is unchanged versus the yen at 108.64. The dollar's up versus the yuan, about 0.1% at 152.50. High-grade copper is down 0.5% at 406, and WTI crude actually had a big drop again yesterday. We're now back below 60. We're at 58.58. We are up this morning at 1.5%. And the 10-year yield is now at 162. It's down about 2.5 basis points overnight. So we've dropped there from around 175 last week. I've said that the negative short-term money market rates in the U.S. would encourage people to borrow short-term to buy these longer-term treasuries, and that seems to be what's happening. I think economic data as well in the U.S. have been really bad. We had some housing data yesterday that were a lot worse than expected, and the stock market doesn't look too good either. So now to our interview with John Adams of Adams Economics. I have John Adams from Adams Economics. He's also the chief economist for As Good as Gold Australia. He also shares a YouTube channel with Martin North called In the Interest of the People. And it's great to have John Adams. I've been following his work and Martin's work for the last few years about the precious metals. And today we're going to cover all the talk about silver and the Perth mints, but not only the Perth mint and other mints around the world who are saying they have plenty of silver, but the anecdotal evidence from the public at large tells us otherwise. John, thank you for being on my channel. How are you doing?
I'm doing well, Mario. Thank you for the invitation. And thing is like a lot of conversation about silver and the Perth Mint. But obviously, one of the other things we're going to cover today, which is the Reserve Bank of Australia and its gold holdings in the Bank of England.
Yeah, that's how I found out about you. I think it was maybe 3 years ago you started
Yeah, it was
speaking about that.
2018.
Yeah, and it got me really interested because I've known for many years from following people like Bill Murphy at GATA. I started following GATA like in 02, 03, because even back then when I was still working in the city, I didn't trade gold for my clients, but I started looking at gold because I bought a few coins back in 02, and then I started noticing that the markets seem to do the same thing at the same time every day, which I'd never seen before. Being in the markets for over 10 years, I never saw markets trading like that. And I started looking into it. And one of the big instruments of the control or suppression, manipulation of the price of precious metals is the fact that the central banks lease out a lot of the gold that they hold to people like the bullion banks or even to the Perth Mint, like you found out.
Absolutely.
Yeah, and so can we go over what's going on at the Perth Mint as it pertains to silver, what you've seen and what you've heard from people? And
Sure. Sure. Yes. So probably around late February, I was hearing anecdotal stories of people who I know in Perth. So I live in on the east coast of Australia, and Perth is on the west coast of Australia for some of your international audience. And I was just hearing stories of people walking into the Perth Mint, retail customers late February, and they basically were being told there is no silver for sale for the general public. Then I heard, so I'm with As Good as Gold Australia. We are a South Australia's largest bullion retail dealership. We are actually an accredited distributor for the Perth Mint, and starting in March, we were told that we cannot place an order on the Perth Mint for Perth Mint products. So we're obviously talking in terms of retail products. I have heard that other retail dealerships across Australia who rely on Perth Mint product cannot place orders. I also, in the last few days, have spoken to a wholesaler who also said that he has had enormous trouble getting. He's been struggling to get a requisite amount of silver out of the Perth Mint, and then probably in the last week and a half, I've had a number of people contact me talking about what I call synthetic silver, unallocated, pool allocated type of products. Perth Mint is one of the largest suppliers of these synthetic products to the market. And like on the interest of the people, my YouTube channel with Martin North, we just recently did a show about it's called Exposing the Synthetic Silver Scam. And what I've found is a lot of Australian investors don't understand the difference between physical ownership, allocated, unallocated, and in terms of pool allocated. So I've been trying to educate people about what these different elements are. So I've done a show on my YouTube channel with Martin North about it. I wrote an article for my website, Adams Economics, last year, trying to warn people about it. And I had a number of people read the article, and I've had a number of inquiries around that. So in the last week and a half, particularly with people who have a synthetic position, who have contacted the Perth Mint standing for delivery, they have been told we cannot deliver. And if you look at the website of the Perth Mint, it clearly sort of says that if you have unallocated or pool allocated, delivery in 10 days. So now, last we're talking Wednesday morning in Australia, Tuesday night in London. So on the weekend, I put out a tweet and basically saying that, and I think you covered this in your show a couple of days ago, where I said I'm hearing horror story after horror story, and pretty much that people are being told that Perth Mint can't deliver the silver within the time frame established, and I said Perth Mint has defaulted. Now, I thought, to be honest, that a few people would read the tweet. And then what happened was Wall Street Silver picked it up, and then a whole bunch of industry giants like David Morgan and Craig Hemke and a whole bunch of other people retweeted it. And as of this morning, 340,000 impressions on that tweet. And obviously, in the last 24 hours, the CEO of the Perth Mint went on local radio in Perth for the Australian Broadcasting Corporation to respond to allegations and online rumours of a default, and that was a very interesting interview, I must say. But what I will say, Mario, is so. I'll give a couple of specific examples just so that people can get a flavour for what I heard. So let me give you an example. So I had I got an email on Friday morning last week, and someone from Perth contacted me and said they placed an order on the Perth Mint for about 20 kilos, 1 ounce bars. 1 kilo bars, and they paid the money, and they were told it's a 4-month wait. Now, if the Perth Mint has plenty of silver, it shouldn't take 4 months to deliver 20 kilos in 1 kilo form. So with As Good as Gold Australia and a whole bunch of other private sector players, if a customer comes to us today and says we want 20 kilos, we can deliver within 7 to 10 days. And we probably could even deliver sooner. But the maximum is 10 days. So the fact that this customer was told 4 months, that obviously was people were scratching their head. Let me get a couple of examples. So I had someone from the Gold Coast. He has about 20,000 troy ounces pull allocated. He contacted the Perth Mint about a month ago, wanting to convert to physical. Never heard back from the Perth Mint at all. I think he wrote to them, never heard back. I got a phone call on the weekend from someone who was one of Perth Mint's first unallocated customers. Now we're talking a small amount, about 2,500 ounces, but because he had a long-standing relationship with the Perth Mint, he thought that he had a good account, a good relationship. And a couple of weeks ago, he called them up and said, I would like to have physical. And they basically said, we have some issues at the moment, call back in 2 weeks. So he calls back last week, and the answer was, we cannot deliver 2,500 ounces consistent with our timeframes. And so we are seeing a number of retail customers with synthetic positions who bought these unallocated, pull allocated positions on the assumption that if they wanted the silver can be delivered within a reasonable time frame. And that is not coming through in terms of their communication with the Perth Mint. Now, I actually closed a very large commercial deal about a week and a half ago, and we're talking in the millions of dollars. A customer who had unallocated at the Perth Mint, wanted physical. He decided to come across and do the deal with the firm I work for. But I have to say that the straw that broke the camel's back was, as we were in the commercial negotiations, he said, well, let me just check with the Perth Mint. So he calls the Perth Mint up and says, well, and we're talking in the tons. And he said, well, if I want to take physical, how long will it take? And the response he got from the Perth Mint was not to his satisfaction. So he just said, well, screw you guys. And he liquidated his synthetic position, came across to us, and he actually bought physical. So we are seeing a number of examples like this. Now, it is interesting that on the weekend, a friend of mine who has about 200 kilos unallocated, he didn't believe me. He didn't believe that there are problems at the Perth Mint. So I said to him, well, when Monday comes, Australian time, and the Perth Mint opens, give them a call. So he did that. He called them on Monday, and he got told there is no silver. We cannot deliver 200 kilos within a reasonable time frame. So the other thing is, so when my friend called me back and said that he was told there is no silver, I said, were you given any sort of a guarantee or a time frame as to when delivery potentially could occur? He said no. Now, what interestingly happened on Monday afternoon was there was a random shipment of silver that the Perth Mint received, and then all of a sudden, for example, the client who bought 20 kilos last week, who was told 4 months, he got a phone call on Monday afternoon saying, we have 20 kilos for you in 2 days. So he went from 4 months to 2 days. So he's going to take delivery today, given that it's Wednesday in Australia. But then, once he got this call and he said, okay, come in 2 days and we'll give you 20 kilos. But then he actually asked them again, well, if I placed a new order, how long will it take for a new order? They said again, 4 months. So even though they had a flurry of silver coming in on Monday afternoon, and they were able to fill in some of the backlog, they are still saying to customers, if you place a new order, it's going to be 4 months. And now, in terms of my friend who has 200 kilos unallocated, he called. So on Monday, he was told no silver. He calls again yesterday. He had the opportunity to take delivery of a few 1,000-ounce good delivery bars. So he decided to take 6 of them. And he's sort of settled the fabrication cost, and so he's taken delivery of 6 1,000-ounce bars, and so he was able to take delivery, all because on Monday afternoon there was some silver coming through. So there's clearly some problems at the Perth Mint. They have been able to calm down some of the public anger because of there was some silver coming in on Monday afternoon, but I've also heard other people. For example, there was someone in the industry who contacted me and said that they received a phone call from someone who had 30 kilos unallocated, and he called up the Perth Mint yesterday, said, I'd like 30 kilos, I want delivery. And they said, we can't deliver. So we are seeing a bit of a movement among retail customers to liquidate synthetic positions and go across to private sector dealerships that actually have silver to deliver, and they're taking those deals up.
Yeah, and you talk about unallocated. I guess when you go to the Perth Mint or another mint and you have an unallocated position, if you want to take physical delivery, you have to convert it to allocated, right? And the Perth Mint wasn't allowing people to do that. I listened to the interview that the CEO of the Perth Mint, Richard Hayes, gave to ABC, and he said he seemed a little nervous, I thought, and he said silver is a very deep market. There's plenty of silver, and he said, and he did mention that they had plenty of 1,000-ounce bars, but I think they probably wouldn't have had come up with the goods, I think, this Monday in Australia, if there hadn't been all the pressure. I think you've done a good job of, publicizing what's going on. There's some talk as well that the Perth Mint might be sending a lot of its silver to Comex. Have you heard that too?
Sure. So there's probably 2 elements to talk about, Mario. So the first thing is, so before we talk about silver, let's talk about what happened in April 2020 with the Comex gold contract. So now so when we talk about April last year, what happened was that there was a range of refineries in Switzerland, in North America as well, that shut down because of COVID-19. Now, there was a struggle to get the requisite amount of gold to settle the Comex April contract. So there was an article by Bloomberg that basically went public and said that the Perth Mint was flying tons and tons of gold to New York to help with Comex deliveries. Now, so what I should say is that at the same time that was happening, retail and wholesale customers in the Australian market were being told you must wait 12 weeks to get any form of gold product. So they did place a preference for Comex over Australian customers. Now, what I was told a few weeks ago was that during this, well, I don't think it was a squeeze, but there was definitely tightness in New York. The premiums on gold shot up. So the premium was about $80 US above spot, and that was the premium. And because that premium was quite high, there was a whole host of players around the world who had the ability to send gold to Comex, and that's what they did. So that's why Perth Mint sent tons to New York, because the premium was they could make more money by sending gold to New York with that large premium relative to rather than supplying in terms of the Australian market. So we have historical evidence of the Perth Mint giving Comex preference over the Australian market. Now, when we talk about silver in 2021, there's three types of rumors that I've heard. One is so when you did your show the other day, you talked about operational problems, the inability to fabricate within a requisite time frame. So that's obviously the official line. They have plenty of silver on hand, but it's a manufacturing fabrication issue. So that's one excuse potentially. Another one I've heard is that they are having problems with their supply chain, and they're not able to get the requisite amount of silver from mining companies to meet demand. And so that may not be because of demand per se. It may be more of a supply issue. So that theory has been put to me. And then the third one is that they're holding back supply in order to support the Comex. So what is the real position? Not really sure. I have to say, I thought it was very interesting that Perth Mint would be interviewed by, they were interviewed by ABC Local Radio Perth, and obviously the journalist has no understanding of the gold market or the silver market, so he didn't know what the right questions were. But obviously we're hearing and seeing anecdotal evidence, and I'm getting direct emails and direct phone calls from Perth Mint customers saying that there's something wrong. And yet, the obviously the official line of the media is that that everything is okay. Now, the other important element of that interview, Mario, is that. So I just put up a tweet about an hour ago, and it clearly says on the Perth Mint website, if you have allocated, you can get your product in 2 days. If you have unallocated or pull allocated, it says delivery in 10 days. Now. They can't deliver in 10 days. So that's why I wrote in my tweet that they have a default. So now it's interesting that when he was sort of asked about this, Richard Hayes said that 10 days is actually not about actually giving silver over. It's about arranging quotation and arranging freight costs. Now, anyone in the industry knows that you can arrange a quote and arrange freight costs in maximum 1 or 2 days, depending on the complexity of the transaction. So the fact that he's now saying, well, people have misunderstood what this 10-day period was all about, and the 10 days is actually not that we're going to give you silver in 10 days, but we're just going to arrange a quote and arrange costs. I mean, that is just a completely extraordinary position for the Perth Mint to take. And obviously they're changing the definitions of their own terms and conditions because they have been found out.
Yeah, and I noticed the interviewer, he was very not knowledgeable at all about the silver market or gold market. It would have been good if you had interviewed him. And I also noticed that he asked him, why has silver gone up, lately or in the last 12 months? And he didn't mention anything. That's the CEO of the Perth Mint, didn't mention anything about all the central bank money printing. I know the RBA is doing yield curve control. I think they've done 200 billion of QE, and he didn't mention that at all. He just put the blame on GameStop and things like that, as if silver was not that important. I just thought that was quite economical with the whole fundamental picture, or maybe he doesn't follow the fundamentals at all.
Well, you know what? So I've never had the opportunity to meet the CEO of the Perth Mint, but if I did have the opportunity to have a sort of public conversation, I have a whole host of interesting questions to be able to ask him, and it'd be interesting to see what he says. But taking a step back, Mario, I mean, the most important element of this whole conversation that I want to bring attention to is so. I mean, you opened up the show and talking about suppression and manipulation. Now, you believe it, I believe it. There's a range of people across the world who are openly now talking about how rigged this market is. Now, I should say there's a whole cadre of people in the Australian industry who would call people like you and me conspiracy theorists. Even though that the evidence is, I think the evidence is quite clear. Now, one of the ways, and so I have regular contact with both Bill Murphy and Chris Bell from GATA. One of the ways that manipulation happens is around rehypothecation in terms of leasing arrangements, etc. So one of the big concerns is about the question of synthetic products, and are these synthetic products actually 100% backed, or are they running a fractional reserve synthetic program? Now, one of the important things, and I know you explained this the other day to your viewers, but just to recap, so there is a clear distinction between if you buy physical and you take delivery in actual and you walk away with the silver or the gold, or you have allocated, that silver or gold is your legal property. That is what you own. And that you have legal title over those bars or coins, whatever. When you have unallocated or pool allocated, you technically, on a legal basis, own nothing. You own a promissory note from a counterparty, and that counterparty basically says, as the price fluctuates, you will enjoy that exposure. And also, if you wish to have gold or silver, we will deliver within a requisite time frame on the assumption that you pay fabrication costs. So that is what these synthetic positions are. So now, obviously, when things are normal and the market is quite calm, synthetic products, they have their place. But obviously, when things become acute, like a short squeeze or a financial crisis, etc., that's when you're going to have a rush for people to ask for physical. And then the question really becomes is, well, are these products 100% backed or not? Now, the claim, for example, by the Perth Mint is that their products are 100% backed. Now, one thing that I have been able to expose with Martin North over the last 12 months is that, so you heard about me in 2018 when I started asking questions about the Reserve Bank of Australia and their leasing of 11 tonnes. So we were sort of scratching our head thinking, well, why would the RBA lease 11 tonnes of gold and who has it? And that was in 2018. In February of 2019, when members of Parliament asked the Reserve Bank of Australia some questions about this because of the videos I did, the RBA to Parliament said, quote, when we lease, the gold does not move. So, and to be honest, I found that a very extraordinary statement because on the one hand, the RBA, has only been in the vault at the Bank of England a couple of times in the last decade. So the first thing I sort of asked myself is, well, how would they know if the gold moves or not? That they're actually not in there, and they're basically taking the word of the Bank of England. But if we assume that statement is true, the question then becomes is, well, who would borrow gold, 11 tons, about $700 million, if the gold doesn't move? I mean, for what purpose? And now what happened in, I think, late 2019, and Martin and I covered this in 2020 in the show, is that through a Freedom of Information request, there was an email between two RBA officials which was released. And it was revealed in this email between two RBA officials that the RBA has leased the gold to Gold Corporation, which is the corporate name for the Perth Mint. Now, what is the business of the Perth Mint? They are a refiner / manufacturer, and they are a retailer. So you must ask the question: if the RBA told Parliament the truth that when they lease 11 tons, the gold physically does not move, why would a refiner / retailer borrow 11 tons? Now, to my mind, there's only one answer, and that is to provide backing for the synthetic products. So when the Perth Mint says that they're unallocated, pool allocated, and they also have an ETF, when they say that these products are 100% backed and they are audited. Now, so the auditor, and again, I'd be interested to participate in one of these audits to just see what the auditing process is looking like. But I would assume that the auditor would come in and say, okay, your exposure is for example, 100 tons. Okay, so show me where the 100 tons are. And so the public and investors would think that if there's an exposure of 100 tons, well, the Perth Mint has 100 tons lying around in some warehouse in Australia. But what people don't realize is that the RBA uses accounting tricks, and they use things like they use leasing arrangements, and they've leased 11 tons of gold, and that lease arrangement counts as they having ownership of gold, and that actually is part of the accounting in terms of this backing. So they are definitely they are definitely without a shadow of a doubt running a fractional reserve synthetic program. Now, do they have silver on hand? Do they have gold on hand? Absolutely. Do they have all of it on hand? No, they don't. And that's obviously the why they've borrowed 11 tons of gold from the RBA that physically does not move. Now, if you go to their most recent annual report, they said so. There's a item in the balance sheet. It's called precious metal borrowing interest bearing. So as of 30 June 2020, that was $1.7 billion. So a portion of that is the RBA's gold, the 11 tons, and then they've obviously borrowed gold or silver from other counterparties, which is not transparent to the market. And obviously, why do they call this interest bearing? Because when they pay the lease fees, that is what they call what the interest cost of these borrowings. So they're borrowing metal. So this is rehypothecation. They're using it to back up their synthetic positions, and obviously. We have investors who clearly didn't understand the distinction between physical ownership with legal title versus synthetic ownership. And obviously, we're now seeing what happens when a lot of people come and rush for delivery. If you don't have it all on hand in the form that clients want, you have problems. And that's what I think we're seeing with the RBA. Sorry. What we're seeing with the Perth Mint.
The other thing I would say, like with the Bank of England, people might ask why is Australia? I think they keep 80 tons with the Bank of England, right? It's most of their gold. Yeah. And why would the RBA keep all their gold at the Bank of England? And the thing is, London is the center of gold and silver trading, I would say, in the world. And the LBMA, even though it's not part of the Bank of England, they work very closely together. I think if you look at the LBMA, the head of the LBMA now used to be a Bank of England guy, if I'm not mistaken. And so what I think happens is I think the Bank of England keeps 5,000 tons, I think, of gold for other central banks. The UK itself only has 300 tons because Gordon Brown sold half of it, of course. And what happens is like people like the Perth Mint, the bullion banks, they go through the LBMA to the Bank of England, and they hypothecate many times over all these holdings from other central banks. And they don't care, the central banks, because they get the lease rate, the gold never moves, and at the same time, the bullion banks can control the price of gold by doing fractional reserve. It's pretty much like the FX market, because if you look at when I started in the business in the late 80s, the small firm I worked for in Switzerland, they did a lot of foreign exchange, and there was a Reuters page called FXFX, and it had all the major foreign exchange pairs, and at the bottom it had XAU, XAG. And I asked the dealer, because I was quite junior at the time, what's that? And he said, well, that's gold and silver. So for the bullion banks, they think it's normal to rehypothecate everything and to make up, sell things that they don't have. So, yeah.
Sure. Murray, look, I was just going to say 2 points. So one of the questions you asked is, well, why would the RBA have 99.99% of its gold in the Bank of England? Now, questions have been asked about this. And one thing I should say is, because I did a couple of shows with Martin North back in 2018, a lot of Australians actually contacted the RBA and flooded them with questions and complaints. So to their credit, they actually created a web page where they provided some public information about their gold holdings, whereas before it was completely opaque. Now, it was better to have some information compared to no information, but their public rationale is that the largest market in the world for gold is London, and that if the RBA ever wanted to buy or sell gold, it is the best place for the gold to be, because they have a very liquid position. Now, the problem with that rationale was that now we had 247 247 tons of gold in 1997. And the government at the time, that the Howard government, sold 167 tons. And that's why we have 80 left. Now, since 1997, we've always had 80 tons. So we haven't bought anything, we haven't sold anything in more than, say, 23, 24 years. So here's the thing: if we're not going to, if there's no intention to buy, if there's no intention to sell, if when we lease, the gold physically does not move, the rationale that the gold has to be in London because we want to be liquid, I mean that's just completely erroneous. So, but in a public forum in late 2018, the RBA governor was asked by one of my viewers about bringing the gold back, and he just says categorically, no, we're not. The gold's not coming back. And so there's at least one member of Parliament who is actually quite passionate about this issue. We've had some private discussions. There could be some movement about this topic in 2021, so we'll have to see in terms of where that goes. But the other thing I wanted to raise, Mario, is that, so when I started doing some of these shows with Martin North in 2018, so we did the first show about the leasing arrangement, the 11 tons, and then we did a second show about these gold audits. Now, when we did the first show, we actually played a clip of Eric Sprott from, say, I think 2012, 2013. And Eric Sprott was around the table with a number of people, and this was a documentary. And the allegation that these people were making was, even though the Reserve Bank of Australia told Parliament in 2019 that the gold does not move, Eric Sprott and everyone else in this video, in this documentary, was saying the gold actually does move from the Bank of England. So in order to suppress the price, so what Eric Sprott did was, he looked at how much demand there is around the world, how much the mining sector was contributing, and basically saying that the mining sector can't contribute to the additional demand that is coming on the market. So he said there must be, quote, an official sector supply. So the official sector is obviously government. So and then there was a gold expert who basically said that the Bank of England leases the gold to the bullion banks in London. The gold physically moves from the Bank of England to the bullion banks. Then the bullion banks send it to Switzerland. The gold is melted down, refined into smaller bars, and then sold into China, India, and a whole bunch of countries in the Middle East as well. So that was the accusation that Eric Sprott and others have made. So there is a real question now. There are some really big questions about these gold audits. So prior to 2013, the RBA had never audited it, had never had an audit of its gold. Then so since 2013, there's been two audits, 2013, 2019. Have they ever released the audit report? No. They were asked, is there any problems? They said no problems. But once you look through the audit methodology, it's clearly a sham audit. And that's one of the things we exposed, Martin North and I, in 2018. So let me give you some examples. So first off is they gave the Bank of England at least 6 months notice that the audit was going to happen. Then the Bank of England said that you must provide the serial numbers ahead of time so that we can organize for you to come and look at the bars. And so this was the a non-random sample sort of component of the audit. Then when they started asking about having a random sample, initially the Bank of England said, well, we're not going to allow you to have a random sample because the effort of retrieving these bars is going to be too taxing on our staff. And some of the other things that the Bank of England was saying was, well, you can't just, because we are so busy, you can only come in for a certain amount of days with a certain number of staff, and we're going to dictate as to how the audit is going to happen. Now, in general auditing, the auditee should not be dictating terms to the auditor as to how these things are going to happen. Now, when the RBA did push back and said, no, we do want a random sample, so they basically said, okay, we're going to give you, we're going to basically give you a subsection of your entire holding with these serial numbers, and you can pick whatever bar you want. Now, that to me is not a genuine random sample. The random sample should be, give us all the serial numbers of the 80 tons, and we're just going to walk in there and just pick whatever we want, and you're just going to produce them. So the Bank of England wouldn't allow that to happen. And then they did the audit in 2013, and then someone actually, through a Freedom of Information request, asked for the audit report. And it was said that it's confidential because and they wouldn't release it because it may damage relations with the Bank of England. Well, I mean, to the general public in Australia, I don't buy that, and a lot of our colleagues in the gold market don't buy that either. So again, there are some really big questions around this, and so in general, members of Parliament are completely asleep at the wheel when it comes to gold and silver and its importance in the monetary system. And there is basically zero accountability or transparency that Parliament has applied to the RBA in terms of what's going on. So now, last year there was a member of the Australian Senate who asked a few questions of the RBA around this, but hopefully in 2021 we're able to provide some more information and scrutiny about this question. So just to recap. The RBA officially says the gold does not move. They've only been in the audit twice in 20 years. But Eric Sprott and others say, no, the gold does move. And the gold goes from the Bank of England to the bullion banks to Switzerland and melted down and then sold around the world. So it could well be. Now, a lot of customers, even at the retail level in Australia, think that if they go from a synthetic position, unallocated, pool allocated, to allocated, that is a much more secure position. And so from a legal point of view, it is, because if you have allocated, you technically own gold or silver relative to owning a promissory note. But if the counterparty is running a fractional reserve allocated vaulting system, that's when you get into big problems. And that's obviously the allegations about the Bank of England. That's exactly what they're doing. They're running a fractional reserve allocated vaulting system. Obviously when other central banks have tried to be transparent, also tried to do a genuine audit, there's been resistance from officials at the Bank of England. Now, obviously, what sparked my interest in this whole question was I think in Germany in 2012, they requested their medal from, I think, the Central Bank of France and the Bank of England and the U.S. Federal Reserve from the Federal Reserve of New York. There were questions. There was basically saying, well, initially they said it would take us 5 to 7 years to give you the gold. It was like, well, if the gold's in the vault, why does it take that long? Now, sure, if you're asking for tons and tons of gold, does it take time to move the gold from one country to another? Sure. Does it take 7 years? Absolutely not. So I think there are very big questions. And again, even at the retail level in the Australian market, there are. Again, I have no evidence, but there are allegations of, fractional reserve allocated voting systems at the retail level. And obviously, Sprott has said that the Bank of England is doing that at the central bank level. So if we have viewers who have a synthetic position, I've said this in a couple of interviews in the last couple of weeks, liquidate that position, demand physical, particularly on silver, because that's how we're going to drain physical silver out of the global market and put pressure on the Comex. But if you have allocated and there are question marks about your counterparty, get the physical silver and move it to either hold it you personally or move it to a different counterparty that you think is more credible, because you don't want to be in a situation where you have an allocated position and the counterparty is running a fractional reserve allocated system, and they obviously are not holding the property in which they say that they're holding.
Yeah, it's amazing because I was under the impression that they only hypothecated unallocated, but hypothecating allocated, that's really bad, I think. And there are also some rumors that back in 1999, just before Gordon Brown announced that he pre-announced the sale, which is something that you don't do. You don't pre-announce things in the markets because, the speculators or traders, they front run you. At that time, I think Goldman Sachs was looking to do their IPO, and the price of gold, I think, spiked from $250 to over $300. And I think that's the problem that you get with this system of hypothecating unallocated at the central bank level. If they lose control of the price of gold to the upside, they're in trouble because, like Eric Sprott said, he thinks he doesn't have proof, but he looked at the numbers, and the central banks could end up being caught short and being in real trouble. And there is speculation that Gordon Brown was actually helping people like Goldman Sachs by pre-announcing the sale of the gold. So it had the effect of bringing the price down. And then you had people like Gavin Davies, who was like the chief economist of Goldman Sachs in London. He was a partner at the time, and he was going to benefit from the IPO. And he became an advisor after he left Goldman Sachs to Gordon Brown. So, that's the trouble with the hypothecation. I think the central banks, as I said earlier, they run a fractional reserve gold scheme manipulation. And just wanted to ask you before we wrap up, because in the beginning of February, we saw this GameStop, Wall Street bets. And then people started saying, why don't we, start a silver movement? And I remember the Monday, I think it was the 1st of February, overnight, silver shot up just above 30. I thought at the time that it was going to take more time for silver to really break out. And unfortunately, I was right. I would have liked to have seen silver shoot up. But I think it's woken up a lot of people, not just people in the silver market, but people that hadn't heard of silver that much, of the markets, of manipulation, a lot of young people. And I found that even my channel, the views and the subscribers, the interest is picked up since the beginning of February. So I think it's encouraging. What's your view on that, John?
Sure. One of the things I would advise people interested in gold and silver, particularly on silver, is don't look at the price chart, because we know that it's manipulated the COMEX. So what I've learned, Mario, is the way to analyze these markets is you need to look at the physical flow of gold and silver. You need to find out where the flow is going, where's it going, why, in what quantity, and why. And so on my website, adamseconomics.com, maybe 3 weeks ago, I wrote an article saying that the silver market is fast approaching breaking point. And what I clearly showed in that article was that you could see throughout February enormous stress in the physical market. So at the wholesale level, at the retail level, particularly in North America. I mean, so in the first week of February, we had an uptick in sales in the Australian market. I was hearing out of Asia, they were also seeing an uptick in sales, but nothing like the intensity in the North American market. So retailers got cleaned out. And then obviously we started to see premiums go up in the wholesale market. We obviously saw with the ETFs, SLV changed its prospectus. And that's obviously basically, I consider that to be a default because they're basically changing the formula between the shares and the underlying assets. And so obviously they did that because they couldn't get enough on hand. We started to see the leasing rates in the London market that was increasing. And so obviously we started to see stress in terms of Comex as well. Now, the important aspect of Comex is that the amount of gold and the amount of silver that is that in terms of the warehouse depository that peaked in the 2nd of February 2021 at 399.7 million ounces. So in 6 weeks, we've seen, and I haven't checked the warehouse data that's come out this morning, we've seen about 28 to 29 million ounces leave the COMEX. Now, as I continue to talk to some of our colleagues who have been doing this for 1 to 2 decades, typically silver or even gold doesn't leave the COMEX warehouse, the warehouse depositories. Typically, when they stand for delivery, it's just an exchange of warehouse receipts. So the fact that silver and gold is leaving COMEX, that is a significant deal. And so, so the question is that, so as we go forward, now, April is going to look like a very interesting month for Comex. I think I was on the phone with someone from Canada yesterday, and they said last year maybe about 220 contracts stood for delivery in April. This April, which is a non-delivery month, which is going to be about 2,500 contracts, 15 million ounces. It is huge compared to its historical average. I should also say that March 2021 is the second largest delivery month in the history of the market. The largest delivery month was July last year at about 86 million ounces. Then we had September at about 55 million. March 2021 is 56.4 million so far. April is going to be a very big month, around 15 million for a non-delivery month. And then we get into May, and May could easily be in the order of 60 to 65 million ounces that are being called for. And so with these huge numbers, we know that silver is leaving the vaults because you can, I'm tracking this warehouse data on a day-by-day basis. Now, I have been given some confidential information about who is draining COMEX. I haven't had that confirmed, but it looks like there is at least one big fish or big whale who has extremely deep pockets, who's trying to drain the COMEX. So we'll have to see how that happens. But so I think the main point is that as we see demand for physical silver increase, as we see more and more physical silver leaving COMEX, there will be a point in which, just like with palladium, they will not have enough silver in the warehouse to meet the delivery contracts. And at that point, the price will have to run. So if you think about what happened last July, the price from mid-July to the end of the first week of August, the price ran 60%. So $17.95 US up to $29 per ounce. So why does the price run when you have a squeeze? Because you have to attract sellers into the market. So if you have a contract that requires you to deliver X million ounces and you don't have it, well, you need to go buy it. And then obviously, if people are not willing to sell at the current price, the price has to go up in order to attract people to sell. So I think it could be May that we're going to see some movement on the price, particularly if we have 60 to 65 million ounces being called for, and that I think is going to be a very exciting time. But separate to COMEX now, John Adams and the broader scheme of the silver market. I mean, I'm basically I'm a nobody. I'm a little fish. But what I can tell you, Mario, that as of today. So through just my public advocacy of physical silver ownership and dumping this synthetic product, I have been able to convert through a number of large clients 4.5 ton. So there was 4.5 ton of silver, which were in unallocated accounts or pool allocated, and a number of investors have said, no, I'm taking the physical. And in the last few months, they have taken physical. So the key point I've made is, even though there is there are rumors of a big whale cleaning out Comex, if every person with a synthetic position in the retail market stood for delivery worldwide, and I've heard some stories about big providers in the North American market who sell millions and millions of dollars of synthetic silver. If all of those people with those positions sold it all and demanded physical, we could crack Comex very quickly. So I think there's enough money in the retail market in these synthetic products to crack the market. But if you have that pressure on top of a big whale cleaning out Comex, it would appear that we're closer to the end than closer to the beginning.
Yeah, you said there's a North American synthetic provider. Is that Kitco?
Yeah, so look, I haven't been so I'm assuming that there's a number of providers in the North American market who provide synthetic unallocated, pool allocated gold and silver products. But I have been told that Kitco is one of these large providers, and that there are people have question marks. So again, I'm not, I don't have no evidence, but if you have a synthetic position, sell it, get the physical. I think if all of us get the physical, we can place enough pressure to really drive the price higher.
Yeah, I've been telling my viewers for the last 5 years since I started making my videos that you need to have silver. It's the only way to bring down the bullion banks and this, fiat currency system that's gone on for too long, in my opinion. It was great speaking with you. And before we go, could you tell the viewers in Australia or everywhere around the world where they can look at your work in Australia, where they can go to if they want to buy real physical gold and silver through you?
Sure. Yeah. So I have a website which has all my personal work, my body of work over the last few years. It's called adamseconomics.com. My email address is john@adamseconomics. Feel free to email me. I'm on Twitter. So if you go to Adams Economics, you'll find me there. I work for, like I said, a bullion dealership as good as Gold Australia. We have our own company website with our own products, so people can place online orders or contact the team down in Adelaide, look in terms of phone or email as well. So they're probably the main elements. And obviously, as you said throughout this interview, I do a YouTube channel with my co-host Martin North, where we cover we cover a whole host of issues from economics and politics, and we have in the last 6 weeks talked quite a bit about silver. So if people haven't looked at that channel, particularly my latest show about exposing the synthetic silver scam, I really would encourage people to watch that show, because I think we provide some useful information for retail investors.
Yeah, and that channel is in the interests of the people. So, right. John, thank you very much. I wish you a good start to your Wednesday. It's still Tuesday here, and I look forward to maybe speaking with you again soon.
Thank you, Mario, for having me on.
You're welcome.